Hey, everybody, Marty Mazzora. Good afternoon. May 3rd, 2016. I'm going to really effort to keep this one quick, so I'm going to work right from my daily log to keep me on track. Dow was down like 140 today. NASDAQ and the S&P were down both close to 1%. Dow was down like 190, I think, at its worst. I took a look at my charts where I track sectors using ETFs that track their respective S&P sector index. And from a technical perspective, what I've been showing you on the S&P chart, which we'll get to here in a second, I'm kind of seeing the same thing across most sectors now. Some of that relative strength that I showed you a week or so ago has been waning. Today, for example, the short-term charts for utilities look positive. Now, that would be a very defensive thing, and the charts for things like materials that have been strengthening look negative. Financials still look, I'd say, give me kind of a neutral tone, neutral to negative. High-yield debt looks negative. Global telecom looks negative. Healthcare looks negative. Transportation looked very negative. I will say this, the Global Natural Resources S&P index, I'd still say it has a real positive tone to it. And when I look at things like WTI, West Texas Intermediate Crude, although it was down a bunch today, the near-term chart shows what I still think is some pretty good looking technical strength. Looking at the price of copper, which was also beaten up pretty good today, it still shows pretty good technical strength. And so I do think, though, that this field, the headwinds that I said I think are really gaining some momentum for the next couple of months, I think are beginning to show up in various sectors that were showing me some strength as well. Now, on the bright side, the Institute for Supply Management Manufacturing Survey was reported yesterday for April, and it actually still shows, at least for the second consecutive month, expansion above 50. It wasn't quite as high as what economists had expected, but nonetheless, it's been a long time since we've seen 2 months of expansion in the manufacturing sector for the U.S. Construction spending was also constructive, if you will. Today, auto sales came out pretty good, particularly for Ford F-150 pickups. And why is that important? Because that has been a pretty good signal for small business growth in the U.S. It's that small trucks are generally purchased by small business owners, and when those sales are up, it tends to be a harbinger of good things for small businesses, or it says good things about the U.S. economy. So those sales are very, very strong. So those are some economic pluses. The yen against the U.S. dollar has been just amazingly strong. The lesson that I was offering up last year several times, that it's not all about interest rate differentials among currencies, because here we have a yen that is the currency for Japan, obviously, and we're in a negative interest rate environment there versus the U.S., and the yen has just been screaming higher. The euro has been very strong despite very accommodative monetary policy in Europe, and a Fed that is looking for opportunities to tighten monetary policy. So, folks, often it is really about the prospects for economies globally, and it's not just about currency or carry trades that relate to interest rates. Sometimes it's picking up assets that are cheaper in other parts of the world and expecting that those economies will do better. So I think that speaks to my Saturday commentary last Saturday, where I talk about the prospects for Europe and emerging economies versus the U.S. going forward. But in a nutshell, my view overall really is that there's nothing particularly pernicious in the environment that would smack of huge economic risk that would take us spiraling into the next bear market, if you will. But the market is clearly losing momentum, as I've been showing you for a few weeks. The seasonality is tough when you get into May and June. The prospects for Great Britain leaving the Eurozone are a headwind. And today, one of the Fed voting members said that the market should be ready for the potential of a Fed rate increase as soon as June. If the Great Britain potential exit of the European Union is really on the table, I don't think there's any way possible that this Fed would raise interest rates against that possibility. But there'll be more to talk about as we get closer. So again, the long and the short of it is this rally just looks like it's giving up some steam. So let's just look at the chart real quick. This is the daily 1-year chart. This blue trend line here, you can see the market did try, this is the S&P 500, did try for a couple of days to to build some momentum above that, but really couldn't. Then found that to be resistance once again, and has broken down below that. It's broken down below this 2075 resistance on the S&P. It came right down to this trend line that I drew the other day, and then bounced up against that, and then closed right on this longer term upward sloping trend line. So we're still in an upward pattern. My sense is that we could likely, at least that's what the technicals are telling me, here's two, that might likely give up the ghost and consolidate at some lower level before we go and march up to potentially these all-time highs, and that's that green line right there. I will not be at all surprised to see the market penetrate that at some point during the course of 2016. I just guess I'm telling you that I'll be surprised if it happens in the next couple of months, although anything can happen. I've been wrong many times on these short-term calls, but right now there's enough lining up that says it would make, well, let's put it this way. The near-term risk, I think, is to the downside in the market. Longer term, I am extremely constructive on the market, as I discussed in Saturday's commentary. So, folks, I think that's really enough for today. Stay tuned. I'll be back very soon with more, and I think we're in for a volatile market environment, which is perfectly okay for us long-term investors. Thanks again. Talk to you soon. Bye-bye.